Welcome to bear market territory. This is Chris with Riz International, and this is your weekly market recap. Hello, my fellow traders and everybody watching the replay on YouTube, and of course, all of our special elite members. Welcome to this week's market recap. And boy, we've got a lot to cover this week. For sure. What a turn in the market. We were talking about this a couple weeks ago, how we were just kind of consolidating here and waiting for the market to pick a direction. The CPI numbers came out, weren't so hot, and down we went. And my gosh, Monday was a bloodbath. Monday pushed us well below 3,800 and closed below there, and we have not seen a close above 3,800 since Monday, or actually Friday, excuse me, as we pushed down further on Tuesday. Wednesday, we kind of came back up with the Fed announcement that they're going to raise it 75 basis points when they said, now remember, Powell said he wasn't going to do it last time. He said, oh, no, we don't have 75 basis points in the discussion. That's not in the discussion at all. Well, they went ahead and did it, and look at all of that indecision on Wednesday. Huge moves to the up and downside, but again, closed below that resistance area in 3,800, and then Thursday down we went with everybody finally, kind of chewing over that interest rate hike. And down we went, and then Friday, huge amount of volume on Friday, but really just a sideways day, which was a little surprising, honestly. I was kind of expecting more of a push down, but we couldn't make it any lower here than 36.36, which is right about where we were at on Thursday as well. So that is kind of holding as a little bit of short-term support right now. And we may see more of this stuff. We may see more chop here unless we get a concerted push to the downside. But look at that volume spike on Friday. Huge amount of volume in the market. Let's see here. What was it? It was 4.5 billion shares traded for SPX and considerably more than usual. So, of course, the S&P 500 not actively traded, but you know what I'm talking about. We're talking about securities on the S&P 500. But yeah, huge volume spike, almost double what we usually see right now. The 20-day moving average sitting at 2.5 billion. We traded 4.5 billion on Friday. So lots and lots of activity on Friday, but not a lot of movement. Just a lot of push up, push down, close basically flat on the day. So there's a lot of trepidation in the market right now as we are officially in bear market territory. As I said at the beginning of the webinar, we are down over 20%, and that is the place where they call it. We are now officially in a bear market. Now, that means we can come back out of it on Tuesday, I should say, because Monday is the observance of Juneteenth. Then, yeah, we definitely could. But do remember the markets are closed on Monday, so it will be a short trading week. So that'll be interesting to see because now the market has an extra day to digest everything that's going on, but it also has an extra day of news and catalysts and things like that to process as well on Tuesday. So Tuesday could be an interesting day for sure, but we are maintaining this downtrend here on the S&P 500. Really not a lot of great financial news coming out, that's for sure. The jobless claims were higher than expected. We got a 75 basis point hike. They're talking about more 75 basis point hikes. Now, I'm sure they wouldn't do 100. I'm just confident that Powell will come out and say that he's not going to do 100. And we all know if he comes out and says he's not going to do it, they are absolutely going to frickin' do it. If history tells us anything, and like it did last time, he's like, oh, no, we wouldn't do 75. Well, look what happened. There they go. The CPI numbers were bad, and down the market went. They're trying to recover it with interest rates, and that's really the only tool that they have in their arsenal at this point. And we're kind of paying the piper for all of this growth that we've had for so long. Let's take a look here at the breakdown for the S&P 500. Of course, everything breaking down, but energy taking an absolute nosedive, losing about 50% of its gain so far this year. Was up over 60%, now only up 28%, a paltry plus 28%. Of course, I say that, you know, jokingly, but huge dump in oil, in energy here, and we'll take a look at that why in just a minute. And then utilities, which had been kind of staying positive for, you know, a good while here since about March, taking a dive down with the market, everything going down, but energy taking the biggest hit out of all of these. Of course, now below 20% on the year, so bear market confirmed. And yeah, we can thank Jim Cramer for energy tanking. Yeah, sure. We can thank Cramer for a lot of things. I'm not sure if I'm going to put all of it on him, but I'm sure there's something to that as well. But take a look at oil. Oh my goodness, what a rollover day it was on Friday. You know, looking here, we closed at basically 108 a barrel. So really big move here down from this 120 area that has been acting as, you know, a little bit of a hard ceiling for oil. We do get up there, but it seems to come back down relatively quickly once we get over it. But look exactly where we stopped on Friday. We stopped right here at this ascending support line here on oil. So it'll be interesting to see on Tuesday when the market opens up how oil wants to go. But you know my thoughts on oil right now. Definitely bullish on that, regardless of what direction the market's going, as oil derives its value from something other than the S&P 500. So, you know, really big rollover here. I would say probably needed, to be honest with you. Oil is incredibly high right now, as I'm sure all of us know, as we're suffering at the pump, regardless of where you live. But I didn't see that big of a rollover in my gas price. It looks like we lost 8% on Friday. Yeah, I can guarantee you my gas prices didn't go down 8%. So definitely taking a hit here, but sitting right on that support line, and we'll see if that support holds or not. Gold, not doing anything. I feel like a broken record with gold at this point. Really uninspiring, uninteresting, and really nothing to talk about. Now, you could be like, well, the market's tanking and gold is holding its value. Yeah, that's true, but as a hedge against inflation, you want gold to go up when inflation is high, but yet it just stays stagnant. So not really something that we're looking to get into. Like I said, I feel like a broken record on this, but it's just interesting, just kind of hugging that 200 simple moving average. It's really not going anywhere. Something that's taken an absolute beating right now is Bitcoin and cryptocurrency as a whole, continuing this downtrend that we had from November of last year. We've lost, well, let's calculate it. It's big. We'll put it that way. It's big. 70% of our value. That seems good. So crypto, Bitcoin specifically, taking a 70% hit since November of 21. Nothing but red here on Bitcoin, it feels like, with this rollover in the market. Bitcoin absolutely shitting the bed, as Riz would say. And, you know, we broke through all previous support areas. 30,000 was holding a support. Nah, 25, not even there. 20,000 I thought was going to hold, but, you know, we just started a fresh crypto trading day, but previously still getting absolutely hammered, though it does look like we might have found some support down here, maybe around this $17,000, $18,000 area. We'll have to see if that holds or not, but man, Bitcoin and crypto as a whole not looking too hot right now. So yeah, be very careful if you're in crypto. If you're just holding, then that's fine if you think that it will retain its value, but man, look at this volume spikes here on crypto, or Bitcoin specifically, getting absolutely wrecked right now. Got in one position, and this is an interesting one. Riz called this one, so SPXS. So as I refer to it as extra small for the XS, but it really stands for XPS short. So what this is basically a 3x leverage bear ETF on the S&P 500, meaning that if the market goes down, this goes up. And that, of course, was good for our position that we got in on this one. Let me pull up the price point on that. Now, of course, telling you guys this, I'm not advising you to take this position right now, just letting you know this is what we did. And we got in at 27s, and if I'm not mistaken, I think Riz closed that one. I can't remember if he closed that one or not. No, it says it's still open, so we're still holding on to that one. Hey, girly. Athena coming to say hello. But we are already past profit target 2 on this one. And I will tell you guys, with these 3x leveraged ETFs, be very, very careful. So if the market opens up green on Tuesday, since markets are closed on Monday, might want to consider taking this one off, as these will decay over time. And that's definitely not what you want. Now, for everybody here live on the call, feel free to go ahead and start posting your questions in the chat. But I have one from one of our elite members who messaged me, asked me to talk about Micron and semis as a whole. So let's go ahead and take a look at Micron right now. He was saying how it kind of bounced off 55. I'd say it more bounced here, but we're off about 53. Yeah, right about there seems to be the support area. Let me put that in. Yeah, definitely some historic support there. Actually, no, so he was right around 55. So a really nice solid bounce off 55, but I'll be honest with you, with the market getting absolutely pummeled right now, I would not be looking to take this one long, especially how this went with all the semiconductor shortages right now and things of that nature, issues going on in the South China Sea that we won't talk about because the algorithm doesn't like it when we do that sort of thing. I would be very tentative taking something like this right now. Now, is this a great price for Micron? Absolutely. And if you have a position and you're looking to add or maybe average down, this is a great price to do it. Am I looking to open up new long positions in the market as it is right now? Not just yet. I want to see where we go on Tuesday, how things go. Who knows? Maybe, the president taking a little bit of a spill on his bike will push the market down further, and this goes with it. So, the last thing you want is to try and time and catch the knife is really what it comes down to. This is a straight up knife catch is what this is. Now, is it holding off of this 55 support zone? Yes, it is. Does that mean that it will continue to hold in that area? No, it definitely does not. And especially with the market doing what it is right now, it's very tricky to try and time the market. You might be able to. This might be the perfect entry, and we may give up a few dollars per share by not entering here. But for me personally, I would be a little bit more patient on this one, especially with the market just doing what it did on Friday. There's so much indecision, and I kind of feel like one direction or the other. If we get a catalyst one way or another, I feel like it's going to go that way. And right now, it feels like things are more being pushed down. For lack of a better term. So yeah, I would definitely wait a few trading days on that one, Yas, just to make sure that we have a confirmed move in that direction. But yeah, I would just be patient right now. I think, and I get it, guys. If we're not trading, I understand the feeling that it's like, oh, we're not trading, we're not in the market. Just because we're not taking trades does not mean that we are not watching things, and it doesn't mean that you shouldn't be watching things as well. Being abreast of what's going on in the market every week is one of the things that you need to do as a trader, and just kind of work it into your daily routine. Now, it doesn't mean that you need to read like hours upon hours of news stories every night, or trying to figure out if a hurricane in Singapore causes oil to jump 50% or something like that. It doesn't need to be that in depth, but you should be keeping an eye on what's going on in the market. Of course, if you're an elite membership, we're doing that for you every day, multiple times a day, kind of giving you guys the heads up on catalysts, things that are happening. But if you're not, if you're just watching this on YouTube, my recommendation would just be keeping an eye on the market and what's going on until we have more of an upward direction. I would not be taking any long plays unless you're planning on holding them short term, because as we continue to get beat down here, I kind of feel like it's going to be really difficult to justify taking things long right now. Of course, we have the what I believe is referred to as the death cross, when the 100 crosses over the 200. So, definitely a downtrend here on the market. Things are going into the red. I think we all know that. And just to be very, very cautious right now is my recommendation. Take your profits when you get them. Don't force trades. I think that's the one thing that, myself, I sometimes have. It's like I want to take a trade, right? I feel like I'm doing something. But sometimes waiting for the right moment to strike is doing something. And that's really important to remember, because we have to be tactical with our deployments. We're not going to be sitting here telling you to take everything short right now. Of course, we're not telling you to take everything long either. We're being very patient, very deliberate with our trades so that we can maximize our trades as best we can. So that's my recommendation for you this week. Just keep an eye on things. Enjoy the long trading weekend. And, we will be back at it again in Elite on Tuesday, as I'm not seeing any questions come through here right now. But for all of you on the YouTube channel, please make sure you click that like and subscribe button, and we will catch you on the next one.